So China can go onto a gold standard, I think, quite quickly. The reason she hasn't is she knows that if she goes onto a gold standard, she will destabilize the global dollar-based fiat currency system. And that's not her style. She rather watches America make all the mistakes. This is where the future is. This really is where the future is. And I think that there will come a point when China and Russia will put their currencies onto gold standards to protect those currencies from the collapse in our currencies. So it's probably not all that far away now.
Analyst Alasdair Macleod is warning that the global economy is heading into a storm unlike anything we've seen before, even worse than 1929. Back then, the crash was devastating. Wall Street collapsed by nearly 90%, yet the dollar still had credibility because it was tied to gold. Today, the danger runs much deeper. We're living in the largest credit bubble in history. Supply chains are dangerously interconnected, and governments are hooked on nonstop intervention. This time, the collapse won't just hit markets. It could take down entire currencies. The difference is stark. In the 1930s, money had a real anchor. Our modern fiat system has none. That leaves currencies exposed, weighed down by mountains of debt and reckless policies. Central banks haven't solved the problem. They've supercharged it. Artificially low interest rates, endless money printing, and balance sheet explosions have only masked the cracks. History shows us that when markets are allowed to reset, recovery can be swift. That's what happened in the early 1920s. But heavy-handed interference in the 1930s dragged economies into a decade-long stagnation. And right now, today's policymakers are making the same mistake, only bigger. Instead of fixing imbalances, they're desperately trying to paper them over, creating a system so fragile that the real risk isn't just falling stocks, it's the collapse of trust in money itself. Meanwhile, look at the East. While Western currencies drown in debt, China and Russia have been quietly preparing for this moment. They've been stockpiling vast amounts of gold, spreading it through sovereign wealth funds and institutions. That gives them a powerful option, re-anchoring their currencies to gold. If they choose to pull that trigger, it won't just shield them from the collapse of fiat money. It could reset the global balance of power overnight. And now, we'll bring you Alasdair's full interview. But before we dive in, make sure you hit that subscribe button and turn on notifications. You won't want to miss what comes next.
When a currency goes down, it goes down against another currency. And I know you can look at gold as a currency, but which currencies...
Sorry, I must correct you. Gold is money, the rest is credit.
Right.
Currencies are credit.
Currencies are credit, right. So which credit from which countries do you think would fare I know you've mentioned Asia, but I'm thinking in terms of the dollar, the Swiss franc, the Japanese yen, which during a crisis, traditionally the dollar rallies, the Swiss franc rallies, the Japanese yen rallies. Would you be expecting this to happen again?
Well, I mean, you will get some volatility in currencies relative one to another. Of course you will. I think sterling is horribly overvalued. I can see that collapsing ahead of everything else, particularly when Rachel starts crying again. Really, I think the interesting thing is that China and Russia have gold. They've got lots of gold. I understand that in two wealth funds, Russia has a further 10,000 tons of gold, which it could deploy, if you like, on the central bank's balance sheet. So they would have about 13,000 tons. That's Russia. I reckon that by 2002, the People's Bank of China had accumulated gold in the big bear market from 1983 onwards. When it was 1983 was when legislation was passed appointing the People's Bank of China to handle the nation's gold reserves. And between then and 2002, Chinese individuals were not allowed to buy gold. So they had a clear run at it. And they tucked this away, not on their own balance sheet as reserves, but they spread it around. My information is that it's gone into things like, for example, the People's Army account and also the Youth Communist Wing's account and so on. So it's all spread around. I reckon they could have accumulated a good 20,000 tons by 2002, which they then turned around and said, okay, we're going to set up the Shanghai Gold Exchange and individuals can now own gold. And they have been accumulating gold ever since. And if you look at the withdrawals from the Shanghai Gold Exchange, they total around about 27,000 tons since 2002. So China can go onto the gold standard, I think, quite quickly. The reason she hasn't is she knows that if she goes onto a gold standard, she will destabilize the global dollar-based fiat currency system. And that's not her style. She rather watches America make all the mistakes. I mean, it's Sun Tzu or whatever.
Never interrupt your enemy while he's making mistakes.
Absolutely, Tim. Yeah, that's absolutely right. So that's their view. They've got Russia in tow as a very close partner, running this huge, great circus, which at the moment is 70% of the world's population. This is where the future is. This really is where the future is. And I think that there will come a point when China and Russia will put their currencies onto gold standards to protect those currencies from the collapse in our currencies. So it's probably not all that far away now.
What would you say to the idea that the whole idea of gold being being money now is just a figment of people's psychology? Money is whatever people think money is, because they've been kind of programmed to think it. I mean, if you go back a long way, yes, of course it was, but if you go back even further, various other things have been used as money. So tally sticks and leaves and all those sorts of things.
Well, gold's easier to use than giant stone statues.
And actually stones as well. So what?
And cowrie shells. Look, it's a question of progress. I mean, it's a question of progress, and what becomes acceptable to the counterparties that you're dealing with. And also, when we set up colonies and dominions and all the rest of it around the world, I mean, you're dealing with all sorts of people, not just your local community. I mean, you could do it. I mean, you could do local community just purely on credit. I mean, there's a fascinating story, which is well documented, that in Guernsey, the States, which is the government in Guernsey, back in 1770-ish, something like that, decided they needed to build a new meat market, which now is still standing there. It's now actually, mainly the co-op and offices and so on. This was going to cost, I think the figure was something like £4,000. So what they did was they issued tickets which could be used as currency. And the tickets were, I think, £10 each or something. So they issued enough tickets to pay for the cost of the building. And out of the rent, they were able to redeem these tickets over the following 10 years. No money was involved. No money was involved. It was just done on credit. Classic example of how credit can be used positively.
Right now, the global financial system is standing on the edge of the largest credit bubble in history, one so massive it makes the 1920s look small by comparison. For years, central banks kept interest rates near zero and governments borrowed like there was no tomorrow. The result? A financial structure so fragile that even a hint of deflation could trigger a systemic breakdown. To keep the machine running, policymakers have been flooding markets with cash, printing new reserves, and ballooning central bank balance sheets. On the surface, it creates the illusion of stability, but underneath, every dollar, euro, and yen is losing credibility. People are waking up to the fact that the money in their pockets is being devalued by the very institutions meant to protect it. And here's the kicker. The economy looks fine if you only read the headline GDP numbers. But strip away government deficit spending, and what you find is a hidden slump already taking hold. It's like painting over cracks in a dam. Eventually, the pressure bursts through. This is why gold's rise isn't just about speculation or safe haven buying. Gold is exposing the weakness of paper money itself. What many call a bull market in metals is actually a bear market in fiat currencies. And that should worry every saver, every worker, and every investor. Because when confidence in money collapses, it's not just markets that get shaken. It's the foundation of the global financial order.
Now, we all recognize there's a debt bubble, but do we recognize we're in a credit bubble? I think very few of the people punting in, the momentum stocks in the market actually understand that it is a credit bubble. And, you've got to point out to them, debt is the other side of credit. You can see the debt. It's obvious. This is the biggest debt cum credit bubble in history by miles, far bigger than 1928 to 29, roaring 20s, and what happened subsequently. This is far, far bigger.
And isn't the problem with the debt bubble that the central banks simply cannot afford for deflation to exist? So we will get inflation, and as far as I see it, that ultimately ends in either hyperinflation or currency collapse or both.
Yeah, I think what you're referring to is credit substitution. There is no doubt that as the credit bubble pops, then financial asset values are going to go down. You will find also the risk of holding credit rises, which basically means that interest rates or bond yields along the yield curve will rise. And under those circumstances, the central banks tasked with being the lenders of last resort will try and replace contracting private sector credit, commercial bank credit, etc., with fresh currency both in the form of notes and also reserves on its balance sheet. Yeah, you're right. And it's that will collapse the currencies, because we cannot afford, if you like, to allow our economies to go into what they call recession. We used to call it a slump. We're already doing that, incidentally. If you take government deficits out of GDP, remove that from GDP, and over the last 2 or 3 years, you can see that we're already in a slump. And you go up and down the country, go into the high street, see what's going on there. Go and talk to people, see what's going on with them. And things are extremely difficult. But, this doesn't show in government statistics as much as it should. So we're already got the conditions, if you like, that are creating this existential crisis, the end of the fiat currency system.
And presumably it's gold that's primarily signaling there's a fire raging.
Yes. I mean, the way to look at it actually is not gold is in a bull market. Gold is
all currencies are in a bear market. But
all currencies in a bear market. Currencies are going down. I mean, the way you've got to look at it is you're not buying gold, you're getting the hell out of credit. Because currencies are credit. And incidentally, modern economists don't actually recognize that currencies are credit. They're not well versed in the difference between money and credit.
So just to make sure that I understand your thesis here. So you're saying, going back to the Roman times, basically everything that isn't gold is credit when it comes to money. So then the only thing that is money is gold.
Well, we've evolved to gold. The answer to that one, Paul, is that we all work on credit. We never, even under a gold standard, you wouldn't dream of paying your workmen or whatever in gold sovereigns. You would always pay with a bank transfer of some sort, a check or cash. In other words, a gold substitute, which is really what a Bank of England note is. So you would never really use gold. You always use credit. In any healthy economy, there will be a lot of credit around. But the problem becomes when there is too much credit, the debt, if you like, is unsustainable, and therefore the situation goes into collapse. If you have credit which is expanded to finance production, then basically you have an extremely healthy economy. Where it goes in to finance consumption, then you're driving up prices. And if you're not driving up prices, then what happens is that your gold reserves, the central bank's gold reserves, decline. And this was the situation that we had from about 1947, when the US Treasury's gold reserves were in the order of 22,000 tons. I mean, we're looking at something like 60% of above ground gold stocks at the time. By the time we got to 1971, it was down to just over 9,000 tons. The reason that there was a run on, if you like, on the US gold reserves is because prices were suppressed by the link between the dollar and gold. And people were taking out gold. They were exchanging those dollars back for gold because they realized that there was this tension, if you like, between the two. As long as you could exchange it for gold, then of course, what would you do? You would exchange your dollars for gold. And that's what nations were doing because, of course, you and I couldn't do it. We were banned from doing it. So it's a question of scale. I mean, we need credit, yes. It is the basis, if you like, of post-feudal economies, very much so. But it's when the situation gets extreme and credit is pushed into the wrong direction, like government printing it to finance their excessive spending.
If governments keep piling on debt and central banks keep printing money, the future for gold and silver could be nothing short of explosive. These metals won't just sit in the background as hedges. They could become the core pillars of financial stability in a world where paper currencies are breaking down. Gold, the timeless anchor of value, could face unprecedented demand from sovereign states and major institutions desperate to shield themselves from fiat risk. Silver, with its rare dual role as both money and an essential industrial metal, could surge even harder as tight supplies collide with strategic demand. This isn't just about prices going up. It's about a potential reset of the entire financial system. Now I want to hear from you. Let's turn this into a quick poll. Do you think gold and silver will simply climb higher in price? Or will they completely reshape the financial system as trust in paper money disappears? Could governments fight back with new digital currencies to delay the reset? Or will we see all of the above play out in stages? Drop your answer in the comments. I'll be checking to see where most of you stand. If you found this breakdown helpful, don't forget to like, subscribe, and hit the notification bell so you never miss a critical update. Thanks for watching, and I'll see you in the next video.